What's going on, everybody? Welcome back to the Dips to Rips podcast. It is your host, Charles Moon, the disciple of trend, with my amazing co-host, Howard Greenberg, and with a special guest, the master of 1 hour trading, Mr. Mike Shore, who runs the short-term options program at Prosper Trading Academy. Mike, how are you doing, brother?
I'm doing all right, man. That was a fun day. Harrowing. That's what harrowing, but kept your wits, keep your head on a swivel.
Yeah. And quite honestly, for those that don't know who Mike is, he is a short-term day trader from a scalp basis with high level of accuracy, extremely disciplined opportunities, and more importantly, a master of risk management. Quite honestly, he is known for taking small losses when he does. And when he wins, obviously it's coming in big bunches. Truth be told, Mike is one of the most accurate, if not probably at this point, the most accurate trader that I actually know. And what's astounding about this is because it's not like Mike is taking one trade a month. Mike, how many trades do you take on day in average? Let's say like a day like today.
20. I think my average is about 23 a day.
Throughout the entire day?
Yeah.
Okay, perfect. You know, this is where the accuracy comes into play, because he has his clients on certain days absolutely railing it. Who was the one that went, I think he said he did 9-0 or 15-0?
15-0. That was, I won't use his last name, but that was Brian J.
Brian. Oh, and he's a newer client or an older client?
Yeah, I think he's only been maybe 3 months. I think he said he's only had one losing day. I was like, I think I might have had more than one losing day, but he you know, he's one of these traders. I love these traders that come in that have gotten from point A to point B, you know, and then they need somebody like us to come to take them from point B to point N, and you know, and because he had some decent tools of, you know, that I don't know if they were his own or whatever, but incorporating it. And that's really what I mean, hell, that's what I did. None of us are inventing any of this stuff.
You're right.
I said, I'm not trying to invent the wheel. I'm trying to make it a little bit rounder. That's all we're trying to do. You know, I didn't come up with the Black-Scholes. It's not the Black-Scholes model or anything like that. It's, you know, finding what works for you, works for your style of trading, and that you can build a risk management system around that, you know, that you can plug and play. Not, well, you know, we have 8 different risk profiles that we put on here, and then be able to implement it and make it as simple as possible.
As possible. You know what, Mike? This is something that you folks have to understand. Notice how Mike, the first thing he talked about was risk management. That's the most important aspect. Everybody's so gung-ho. And that's the thing, Mike, right? We also know this. Howard, you know this, that when we do get new students, right, they never have a problem buying. They never have a problem shorting. The problem lies with after the fact. They don't know what else to do after the fact. They don't plan. They have no fear in going into the market, but they don't understand what to do once they get in. And then things get out of control, right? Because that's just the way it is, right? With trading, it's just the wrong time. And then it just becomes an immediate mess. So I love that you're actually breaking down the fact that there's not only, you know, the prime emphasis of risk management, but you have tiers, right, developed for the actual individual, because not all students are the same. So yeah. Mike, I just want to, let's just kind of delve into you a little bit. Can you give us a little bit about your background? Because you weren't a electronic trader, right? That's what you ended up becoming. You know, I started on, right. I was never on the floor. I started behind a screen and a keyboard. So can you just break down your past and how you got to where you are here?
Yeah, I mean, out of college, you know, just like anybody else, well, you know, I didn't know what I wanted to do. And
U of I, baby.
Yeah. And I was introduced to, you know, to somebody, and that's the way that it went back then, you know, that, I mean, we were one of the few companies that actually recruited off of college campuses, but usually, you know, it was kind of like a, you know, how do you know somebody who's on the floor, and then they give you a dirt job and you work your way up, and and so I got introduced, and didn't realize I was in the middle of one of my first job interviews that I ever did, and didn't realize it, and they offered me a job that day. And so and I was like, oh, okay, can I think about it? They're like, yeah, if you want to work here, see you at 5:30 tomorrow. And I was like 5:30 at night, and they're like, no, 5:30 in the morning. And I was like, oh God, just out of college, that was a bit. And so I traded on the floor from 94 to 2013. And I was lucky enough to be, at least I was at the Board of Trade, and we were the first company that had handheld computers on the floor.
Wow.
And so we actually, they were about as big as, basically you could hold it in the crook of your arm. So we weren't entering we were entering trades only, till I left the floor, we were still carting up trades, and they carted up trades until they closed the floor.
Right.
Siebel was a little bit ahead of us, but what we would do is when we made a trade, we would cart it up like we normally would, and we would enter it into this computer. So the 8 traders of us on the floor, all of our risk went to the risk manager, or our boss, and he's getting all the trades, and he's managing the trades that we're doing on the floor. And then, then I became him.
One second, Mike. For those that are wondering, when Mike's saying carding, so the way that trading is done on the floor is that trades, right? Like they'll bid back and forth, and then someone will bid, someone will accept, and then they write the trade on a card, and then they give it to the clerk, and it gets processed. But you would write yours on the card and then put it into the machine, and then your boss would handle it after the fact.
Right. Yeah. And so that, exactly. So it was still very antiquated until the very end, but so I got used to being able to. So my transition, and maybe one of the reasons I'm still in this business, is that I was used to both. And so of course, when the market started to transition, they were side by side. The floor would trade against, kind of against, but parallel to the screens. Mm-hmm. And so we would be able to we would make markets on the screens, and then we would have the 8 or 10 of us on the floor too. And so, big order comes in the screen, or a big order comes in the floor, gives us the ability to lay that stuff off right away. And so the transition for me was not nearly as, I think part of it was a bit of my age too. I was a bit younger than everybody down there, and so I was a bit more computer savvy. So it wasn't that big, but it's still a big deal. Trading on the floor, and especially in a market maker capacity, much different than trading as a retail trader. But I was able to make that transition. Many did not. And
you got that right. We actually have clients that are ex-floor traders that have struggled to kind of make that transition.
Yeah, completely different. So,
without a doubt, guys. By the way, right now Disney's going off. Iger is speaking. We were saying this earlier, and I was saying it to the room before I jumped in here, but I said if Disney is getting held up here, because the numbers were a bit mixed for Disney today. Disney reported a pretty big beat on amusement, which is the amusement parks, which was a bit of a laggard. That's been really kind of hurting their margins, because the totality of what they have to do to keep the parks clean enough, like COVID free enough to keep them open, has been like a devastating weight on margins. And last earnings report, they already guided that, there's going to be a slowdown in subscriptions. So we saw that there's a 1% decrease quarter over quarter in Disney Plus, but they offset that because Hulu and ESPN Plus showed a 2% increase. So it was kind of teetering back and forth, trading a little bit higher. The park numbers came in at 8.7, expected at 8.1, and that started lifting it off. And I said, look, all it's going to take is Iger, the magic man, to get on the mic, and all of a sudden we're going to see what the market has been thirsting for. And, this is the same story where Howard Schultz came back to Starbucks And Starbucks is now up like, I don't know, like 60-70% off of their lows and just constantly trying to rise up. I think they ended up going from 52-week lows to 52-week highs.
Wow.
Obviously, Disney has been responsive and actually participating and holding up well instead of being a laggard like we saw in the first half of 2022, which everything was. But really, it was relatively the second half of 2021. Man, Wall Street really did not like Iger's replacement. So one Bezos, guys, one Bezos for Amazon. When is he coming back?
Yeah, I mean, a lot of talk about that. He wants his Washington Redskins first, or Commanders, excuse me.
So can we just say, can I just say this, guys? Now that we're at this point here, right now, we got to break down for Mike. Well, really, the one thing that I got to say, Mike, is that your transition has been great. And more importantly, like, I just see you totally seeing the market, and you got to just, there's got to be some sort of like huge transition from looking at it from a screening standpoint versus seeing positioning in the markets, order flow. And it's fairly different, right? Like, we're now looking for reoccurring patterns, technical analysis, basically a derivative of an algo that's telling us that this is a high probability opportunity. And then it's obviously up to us to pull that trigger or not. Yep. Versus what you were doing on the floor, holding a typewriter sized computer and throwing your cards back and forth. Yeah. So how do you feel now being behind the screen, and more importantly, knowing how the markets were let's say 2020 to now being after 2020 on the screen? How do you feel the markets are in comparison? Do you feel that this is now forever a totally different market? Like, we'll never see the same type of market we saw, I don't know, let's say 8 years ago, 6 years ago?
Yeah, well, you know what? I think that the market and really the retail trader is maturing, where all the tools are there for them now. Right. That was the big thing about, being a floor trader and things like that, is that you would find out about, if I was a customer off the floor, I'd find out about my fills if I was lucky 15 minutes after I was filled. Sometimes on a busy day,
Wow.
On a busy day, it's like, yeah, you're filled. Where? I don't know. That's, you get your order, hours later, depending on how busy they were. And, But now, everybody has the same point of access. Now, of course, you can speed that up, but we're not trying to take 1/10 of a cent out of every options trader or every stock trade. So you can pick and choose. And, there is a lot more algos trading. Disney busting up over 21.
Yeah.
There's a lot, so there's algos, and everybody wants to, the algos are doing this, and I call it the boogeyman. You know what that is? That is strictly an excuse of somebody who's unsuccessful at trading. You have to be adaptive. You have to be adaptive to this stuff. And and it's a reality that there are algorithmic trades out there that are very, very fast, but they trade the same prices that you can. And the idea is, you're not a market maker, you're a market taker. I don't want to buy it, at 99.5 and sell it out at 99.52, and do that 200,000 times a day. I mean, that's what a lot of these.
I think your clients would very much appreciate that type of approach, though, Mike.
Yeah, they're going to have.
As it's funny. I wanted to bring this up earlier. And I used it today in my room, talking about something that I've heard you talk about in the past, especially when we've had in the fly-in students, is trying to pick up a nickel in front of a steamroller.
Yeah.
And that's the same person that complains about the algo trader that could just got them, in my opinion. So could you tell a little bit more what you mean by that? Because I honestly thought you explained that so well to our clients that were in the last fly-in. Yeah,
well, the nickels in front of a steamroller. So that works really, really well until it doesn't. and that's the whole thing. There's all these free nickels out there, and you're out there picking them up. And then the one time that that you do trip on that shoelace and fall, you don't get to play anything anymore.
Yeah, you just.
So that goes back to the whole risk management thing, where, these people will sell these iron condors that are 3 standard deviations out of the money. And, it's just free money, right? That shouldn't happen ever, really.
Until Tesla makes a 20% move after Elon does something.
Right. Or Meta, on earnings.
Oh, yeah.
Nobody was pricing in a 25% move in Meta for earnings. And if they were, well, good for them, but they probably make that play all the time and they lose 99% of the time.
The YOLO strangle, brother.
Yeah. YOLO strangle.
And the thing is that, this thing worked. It worked 40 times in a row, Mike, but this time it didn't work. And I didn't realize I was laying odds of like 35-1 and it blew out my account. And
I mean, I don't know if you guys saw it. The thing that really brought it to the full circle for me of understanding what you had said completely was I saw that on DraftKings recently, somebody bet $12 million to try to win $40,000 when the Bills were up 21-3 or whatever it was.
Yeah.
And they literally lost $12 million. Like that, you talk about a steamroller, that thing is it. But you have these people that, they don't understand. They think they understand and they don't. The same thing I've had people try to explain to me. Well, it's a neutral trade. No, it's not. They don't understand how premiums work. They don't understand how bid ask works. They're only equal if you can get it at equal. And it's that's some of the stuff that I think that I've heard. That I get out of yours. Besides breaking down TA, that I think you do so well is just having that risk management and that mentality. Charlie has that mentality. He's really got me on board. Is if you're going to go, if your thesis is your thesis, stick with it. Have that plan before you go, then you stick with it. I'm one of those guys that I would have a thesis, and as soon as if I was the guy that the first time I got punched in the face, I wanted to quit the game. And it took a while to get that mentality of understanding is, that also you die by 1,000 cuts the way I was doing it sometimes. So, so that, those two things sort of play together. But, risk management, I think, is probably the downfall, quite honestly, to more traders than anything else out there.
Yeah, here's what I always say. And this goes back to when I was teaching my clerks, because, this type of environment didn't exist. The world of options was completely unknown to just about everybody. And we would have to, I got taught. And then once I got good enough to be a member, then now I'm in charge of trading the clerks or training the clerks and then the traders and then and things on from there. But the biggest factor that I've ever seen in the success of a trader is their ability and willingness to realize a loss. I don't care how much money you have. I don't care, if you're on the floor, how big you are or how smart you are or anything like that. If you can't realize a loss, you are going to blow yourself out at one point.
Hell yeah.
And that's the whole idea is you never let one single trade take you down. I have no problem. I mean, my win-loss ratio is actually a lot better than it was last year. But last year, where I was up, 250% or something like that, my win-loss ratio was 56-44. Because why? Because my winners were 65% bigger than my losers.
Yes.
Nice. Yeah, that's what matters. Yeah. And that's it. I mean, that's, it's so important. And to me, it's one of the things that a lot of the students at first, when they come, are the least or are the most reluctant to actually spend time on is on that concept, and, the same thing. Or, for me, the worst thing I can do is go on a roll of 8 in a row. I hit 8 in a row, and the next time I do that, one of my traders goes and puts a 10 times their normal bet in on it, 10 times their normal trade. And that's the one loser. And that person now wants me dead because, they didn't do any risk management. They didn't listen to all the stuff we put in our signals. That's why we lay all that stuff out in there. But you see it time and time again. I'll reach out to someone and say, hey, I know you hadn't been in the room the last couple of days. Yeah, I'm out for a little while. I lost my money. I'm like, how did that happen? We just went, 6-2. And he was like, yeah, well, you did so well. I tripled down, quadrupled down. I did margin or leverage, even worse. I also think that's been a big problem in all of our industries is the easiness to money, right? The access to money through margin and leverage. Yeah. In crypto, it's a huge problem. At least, it's a little bit more mitigated in, equities, but I don't think If you ask the average person that uses margin on Robinhood or TOS, they don't understand how it works.
No, they just know that they can keep buying.
They think it's free money. They don't even understand.
Well, Mike,
Yeah.
I want to bring up something here because Mike made a really big, poignant, statement here about too many people are fixated on the idea that they have to win at 70-80% clip to make money.
No.
And I this is what I say. I say, listen, unless you're Citadel, most of the people that win at 80% clip, seriously, are going just small money. And then the downside is going to be too fast for them to be recovering from. And it's you put all this pressure to be so accurate and really not have much to show for it. And I always say, listen, we're humans, we're imperfect. We should be shooting for a goal of somewhere between 50 to 60%. And what's really important is that we always try to keep our losses as small as we can and maximize our winners. And once we learn, and this is what I want to say to you, which was such a beautiful thing, Mike, once you learn the word acceptance, you learn discipline, you learn structure, and your trading totally change. And the word acceptance is tied to loss. Accept that this is a loser. We can't win every single time. You can't DCA out of every single winner. And if you're trading options and you're waiting for time, well, that time is your number one enemy when you trade options here, and it's not going in your favor. So acceptance of loss allows you to, let's say, if you had wanted to buy at the money monthly contract in Tesla, which is going for $17 to $25, whatever it is, and then you're just seeing it melt down, you could have saved yourself a lot of heartache by, cutting your losses. Let's say you bought it at 17, cutting it at 15, and now you're staring at it and it's worth 2. And the difference is that now you could have had that $1,500 working on something that could actually be making money for you. And instead you let it evaporate and you need a miracle just to get back to where you were at break even. So acceptance of loss prevents that heartache, prevents that mental anguish, and more importantly, gets you moving in the right direction to potentially get on the next winner, perhaps CRM right now, which is reporting after hours that Dan Loeb took on a activist stake in CRM. So that's big because Dan Loeb, which is what is that? What is his fifth point, third point, whatever his fund is called?
Third point.
Yeah. So he's taken on some pretty aggressive activist positions, and
His last few haven't worked out though, have they?
No, they've exploded. What do you mean?
Did
PayPal?
Okay.
I think PayPal, he's up on the right side, 15 points right now, and he's in near lows. So he usually makes a move in the right direction when he takes on his position, just because usually when he gets involved, right, he's trying to get the company going in the right way. So Disney, Iger exploding, right, up quite a bit. It looks like that they are going to reorganize in Disney into 3 divisions, which kind of changes the clutter surrounding the company, and they're going to cut costs by $5.5 billion.
Wow.
There's
and Loeb, like you said, that third point in him, what he's known for is turnarounds, is putting new management in charge, and as an activist, getting board members in, and he's been pretty successful at a few places. Nestle, Sotheby's when that was in trouble. He's turned around a few. Sony, were credited by him when he got involved as an activist investor in it, and got himself a board seat and his people in there. They've turned those companies around.
There's a momentum stock up right now that's up a tremendous amount. This is kind of very 2023-ish. AppLovin, a company that really specifically works with only app companies, kind of like an enterprise situation, but more somewhat like SaaS, somewhere like third-party consultant. It was a big Kathy Woods favorite. They closed at 1268. They hit a high of 1795 after hours ahead of.
Wow.
Yeah, big pop. So yeah, we got some time here. I got a big question for you, Mike. This is gonna be this is one that we talk about, and I kind of need the record set straight to our listeners here.
All right.
Mike, please give me your thoughts about unusual option activity and how crappy it is. I'm sorry.
Yeah. No.
Wow.
No, that's barely even pushing the envelope. I think, I think that it is a clever marketing gimmick because, everybody wants the inside story, right? The same thing with, the boogeyman. What are the big guys doing? What about the dark pool? It's like, okay, those things exist. You're not in that club. So with unusual option activity, that what he's talking about there are unusually big orders that come into the marketplace. And, and when, this is probably maybe about 5 years ago, we started looking at it and I got excited about it. I was like, because I started beta testing these, I set up my parameters of things that I wanted to scan for. And then I just I paper traded it, like literally on paper, hey, buy these here and see what happens. And, I got encouraging results for like 2 weeks straight. I'm like, wow, there is something here to this. And then as week 4, 5, and 6 came, it became literally a random walk, like almost scarily a random walk. It was like 50-50. And the thing is that, and especially usually we're talking about an option trade that comes out. If somebody buys a big block of an equity, well, that there's a buyer and a seller to that, and you can kind of tell if that's new or not. But
right.
At any rate, but you don't know the motivation behind somebody doing that. If somebody buys a crap load of calls, to use Charlie's euphemism, if they buy that, is that necessarily bullish? And you're like, well, yeah, the value of calls go up as the underlying goes up, so that's bullish. Well, what if that person is short a bunch of that stock?
Right.
We're coming to a that is an insurance hedge for them.
Yes.
I'll buy these call options because we're going into earnings, or I'm worried about FOMC or something like that, whatever the motivation is to do it.
So
and
buy
so
short-term protection.
I'll buy some relatively, compared to the position that I have, some cheap insurance to weather this potential storm so I can keep my short position. And the thing is that sometimes it is bullish. Sometimes, if somebody told me, hey, this thing, don't tell anybody, but this is going up 30% tomorrow, I wouldn't just buy the equity. I would buy some way out of the money call and hope that they're right. But you don't know the motivation, and you don't know if it's, it could be a roll. They could have the same position on every expiration. And, you see this thing that, they sold, 10,000 of these calls. And then you go and look further into it. And they sold those calls. And they bought them again 2 months out.
Right.
So that's where it's not, options in and of itself are a directional bet, or they can be, at least with a call or a put, but you don't know why they're doing it.
You don't know other factors. You don't know if they're
right. Yeah. I mean, Charlie, what you brought up today was a great point. You asked them to look at one on Apple, if I remember, or Amazon. And that opened up my eyes, because I of course I'm watching what you guys are saying and listening to what you guys are saying every day. And I definitely watch, the option, the unusual option guys and all that stuff. And it amazed me when I came to Prosper and started listening to you guys. And you used to see that, someone would put on Twitter, someone just saw this, and you just assumed it was bullish. And then, when I came into Prosper and started seeing this, and it really helped me because, CMEs like that with Bitcoin and Ethereum options, you'll get people come in my room and they'll go, oh, I just saw a thing, I was looking and there's this many expiries on CME. And I'm like, you got to be careful. Who plays on CME? The big boys. That's not where you and I play. That's usually the institutions, and that could be a hedge against a spot position. It could be a neutral trade. It can be, a ton of different things, but it's, everyone you're right. I think that is one of the biggest misnomers out there that I can tell you. Before I joined Prosper as a coach, definitely thought that if, you saw a big block of calls bought, get in quick because somebody knows something. Everybody wants to know what Citadel is doing, like you said.
Right.
Well, hold on. So Mike brought up a good point, right? You don't know if that big unusual option is actually just a naked trade, or if there's something else tied to it. Now, last September into October, Tesla was extremely volatile at that time. That's actually where they started getting shaken out, and they broke down from like that 200 range. They're like the last big name to fall, big tech name to fall. All of a sudden, like on a Tuesday or a Wednesday during like when the markets were volatile, we'd see like a $10 million call buy on the weekly expiry, slightly out of the money in Tesla. And you're like, this makes no sense. At least that's what the people in the room were saying. And I said, this makes perfect sense if you're short, like 1 million shares on Tesla and it's just tanking and you're looking for some hedge or protection of your profits, right?
Yep.
And I said to them, I'm like, look, if this person's willing to lose, I don't know, let's say 5 or all $10 million, how much are they up on their short right now? And so I'm like, this is telling me that you are processing this information and you're going to get set up for a kill because they're obviously looking to drive or expecting the stock to be driven down straight into the dirt. And I'm looking at my chart right now. Tesla was in the 260s. They lost that layer in 2.5 weeks. They were down to 205. A month later, they're at 151. A month after that, they're at 101.
101, yeah.
So I don't know. Are you willing to risk $50 million if you have $150 million in profits, let's just say? Of course, but then the market or the participants that don't know, right, that don't question the motive, that don't understand or like think this is, this doesn't make sense, and instead of seeing this as someone knows something, well, yeah, someone was like, I'm going to protect my own, what. And Mike said it right. I get this news, I'm going to buy some far out of the money calls. If you buy too much, you know what happens? If that news hits the door, so is the SEC. SEC is going to be at your door too, asking why you were buying those out of money calls on a random stock. Okay, so now we know how Mike feels about unusual option activity. Mike has definitely tracked. Mike, you and I go way back. I definitely know that you've looked into this. If anything that I know about Mike is that not only will he look into something thoroughly with due diligence, and I thought that I did my research, but Mike absolutely trumps it. He makes absolute sure that this is going to be an asset for him, and he puts in the time and work. And not only does he put in the time and work, not only does it reflect with this clientele, but you can see the legion and loyalty, and there's a reason why, right, Mike? So let me ask you something. How is your approach to coaching with Prosper? Is it a bit of tough love and real education? Is it a bit of, I need you to understand what the hell's going on here because you need to keep up with the pack? I mean, there's different approaches at different times, but I just want to kind of know, what is your coaching style? How do you feel like you should approach as a coach to your program in your room?
Yeah, that is a challenge that I have. That, do I appeal to the people that don't know anything and thus leave the people who have put in the time and the effort and the money to learn this stuff? Do I appeal to that least common denominator, or do I just say, hey, you guys got to catch up? And I try and appeal to both, right? Yeah. And that one, that as you're learning, just like with anything, you learn, you get the base knowledge, so you know what you're doing. You just don't go in there and say, well, I'm just going to follow Mike, because you know what, you're going to have to do these trades yourself. Mike isn't there to click the mouse for you, so you need to understand that. So a big thing is, do you understand at least what I'm talking about, not just your ability to follow my signals? Because there might be a day where I'm not, maybe I take a week off, for God's sakes, or something like that. Or what are you going to do there?
They're stuck with me, man.
They have me coming in to talk about Bitcoin and confuse everybody.
Yeah. So I try to be, very, very, because it is scary. If you haven't traded, or if you haven't traded options, just the scope of what can happen. That was a big problem for me when I was a young trader is that, I would at night, I would look at my, my risk of my portfolio that I had on, and I'd be like, and I was a bond trader at the time, man, if interest rates move 3% today, I can lose $3 million or something like that. And it's like, okay. And one of my mentors, he told me, he goes, Mike, he goes, the end of the world only comes once. He goes, trade like that. And so,
I like that.
Basically saying that, you can't look at the one time that this is going to happen in your career and build your approach around that. So getting an understanding of what is my real risk here, and are you comfortable with it? If you're not comfortable with it, then you're taking too much risk. And so I try, and I try, basically what I do is I try to be as very nice and huggy feely with the new people, understanding that, it's scary, they don't understand it. And then once they do get to that point, then it does become tough love, because I will see that, I'll get private messages about something, and it's like, man, how many times are we going to have to talk about this before you listen and stop trying to, swing for the fences, which is, you'll get people that swing for the fences all the time. Usually what happens is that they have a bad run or something like that, and then they feel that they have to get that money back. And I call that divorcing the dollars from the risk. And it's hard to do. But if you look at this and you say, okay, if you didn't have any money, or if you're just playing with play money, would you take this trade? Probably not. But I am down $150 today, and I do want to make that back. Well, you know what? The first thing is, if $150 loss for you in a day, then you took that, then you either are not paying attention to your risk, or not allocating properly, or something along those lines, where you shouldn't ever be in the place where you're like, man, I can't accept this level of risk, of loss that I had. That means that you're over trading. You're not covering your risk. You're hoping. Hope is not a business plan, and you have to treat trading as your business. And would you do that? Would you just I'm going to be a rubber ducky salesman. I know nothing about it, and so what am I going to do? Well, first thing I have to do is buy 4 million rubber duckies. No, you get your little stand there at the at the Dead concert or wherever they sell those things, and you you buy a dozen of them, and you make a couple bucks. You're like, okay, I'm going to roll that money, and I'm going to buy I'm going to put 4 people out over.
I'm about to make $1 million.
Yeah, but I mean, you have to realize that you are building something, and that this is not. I'm not saying you can't get rich quick trading. You can. I used to say that all the time on the floor. You'd see some Yahoo come in here, and I would say to him, you know what? You're not going to be in this business in 6 months, one way or the other.
Yeah.
You might get lucky. Most of the time, the very, very great majority of the time, you're not. You're going to blow out, and we won't see you again, and nobody will remember your name in a week, because except as the butt of everybody's jokes, because you watch the guy first in slow motion, and then all at once lose everything. And you don't ever want to get yourself in that position.
You're right. You're dead on right about that, Mike.
Yeah, it's not. This isn't stressful for me, because I understand how good or how bad things can get, and so I'm able to kind of get. You don't have to spend 20 years, 30 years doing this to get that. Like, everybody, calm down. Yeah, we just had 2 losses in a row. We lost 7 cents and 14 cents on 2 trades. Okay, relax. Did you forget about the 8 others before this? Just everybody keep your head about you, or stop. I mean, sometimes you're like, man, I'm either not in the right frame of mind, I'm not seeing things correctly. Then stop.
Yep. That's the hardest thing to tell people is, for me in the room today, we got in something early and it's working out well for us with Mana, but in the afternoon, someone's like, you got anything? And I'm like, no, nothing's lining up to my eye right now. I'm not going to make a trade just to make a trade. Yeah.
But they feel that if they're sitting in their desk, I'm a trader. And what do traders do? They trade. And that's the other joke I say. There's a members lounge at the exchange for a reason, because if I'm standing in the pit, I'm making markets. I'm going to do something. I want to be in the action. So what do? You physically take yourself out of the pit. And then you leave the junior guys in there and let them say, hey, don't do anything big. If something happens, come get me.
You're right.
Because you know that, that you're going to overtrade. And when the
Absolutely.
market is telling you not to trade, don't trade.
And again, down at the Chicago Board of Trade here, right below us, we have Ceres, and it'll be like, I don't know, 10 o'clock, and you can see Ceres busy, or it'll be like 3 o'clock, it'll be busy. There's the cigar shop. We have those men's shops. Again, they're all there for a reason. I mean, when Billy Go was here, we would walk in 10 o'clock, whether it be, traders. Sometimes it'd be at 6 o'clock, right? The overnight shift is in there drinking, but sometimes people just need to step away. And what do? Well, they need to get a beer, whatever it takes. They just need to get away from the action to prevent them from doing something stupid. I think that's a great analogy here. And the same thing you have broke down as well, too. It's just like, people are not sure. Maybe they're getting down. They're just uncomfortable. They're very confident. They're like, I know the stock. I've been trading it for the last month. They decide to size up in something like NVIDIA and Tesla. And then it's just that one moment that they decide to size up, go beyond their risk threshold. It just breaks against them very quickly. They don't know what to do. They don't want to sell because that all of a sudden, $50 loss they're accustomed to is looking at them at $500. Like, I'll just wait till it bounces to close. And then it drops down. And then next thing you know, stocks like NVIDIA and Tesla, which have, I don't know, sometimes $3-4 prints on a 3-minute candle bar. You just never know, right? Like Waller today, for example, or Williams earlier today. All he has to say is one thing, one quote getting onto that social media, and whether it's the machines or retail or all the above decides to just get crazy, it just becomes that sharp, out of nowhere drop. And again, if you're not utilizing stops, you're not listening to Mike, you're beyond your risk tolerance. It just gets to that point of no return, and then nobody knows what to do. And then we have people coming to Howard, Mike, or myself asking what to do. And I just sit there and go,
yeah, I mean, that it is the worst feeling that you get is when the student comes in and says, hey, can you take a look? For me, it's usually someone who did a either coin or Mara or one of those in some sort of crazy option. And they're like, I did this, will it turn around by tomorrow? And I'm like,
someone asked me if Microsoft's going to open at 273 tomorrow.
What did it close at?
266 or something like that.
Yeah.
And I said, I don't know. I'm like, my man, if you could predict that.
If I can predict that, my last statement would have been, buy this before we leave.
Right.
I don't know how to answer that. You know what? I got to say something, guys, now that I have both of you here. You guys, the viewers have to realize how blessed this dude right here is, okay? Because I got Howard and Mike, and I chat with these guys all the time, and I'm bouncing ideas, or we're talking, or Mike's sharing information. And the one thing that I take from these two is not only how smart they are, right? But they're in their positions for a reason. And, I guess I'm the young guy out of the group, but more importantly, these guys have always answered any question that I have, as stupid as it may be. And they've always at least bounced ideas off of me, and like listened to any kind of stupid idea or any of my mistypings, and being able to read through whatever language that I'm trying to write, which is English. But, they've always been great. They've always been like big brothers to me. So I just want to say I'm grateful for the both of you. Thanks for dealing with the little younger brother that's always kind of trying to tag along. I'm very appreciative.
You know
guys.
that. No, but I will say that it is the great. I will say, working at Prosper, two things that I take away. Number one, how we all work with each other. Scott, everybody is always, there. The other day I told Mike, I put out what I was going to do in the foundation room. Mike's like, oh, I didn't know you liked RSI. Have you looked at this? He didn't know I'd already watched his video and attended the foundation room where he did it. But, he cared enough to actually just come out and ask me that, where in a lot of companies, everyone's trying to hide what they do versus others. We all work together and we all succeed together. And it's one of the, the great things that I like about Prosper and love about working with you guys.
Yeah, it's a total two-way street. I mean, I didn't get to tell this story, but I mean, as a floor trader, I never looked at charts, Charlie. I mean, I didn't. And so, but now that's one of the transition I had to make. And guess who I learned technical analysis from? Is it exactly the way Charlie does it? No. But I mean, you could see, you're like, oh, that kind of looks a lot like Charlie's chart. Like I said, but I would be dead in this area if I didn't know that stuff. And I was like, wow, you should probably pay attention to this stuff. And I should have, in the 20 years I was on the floor, I was just more concerned with other things and let the risk manager look at it. But
no, I mean, again, it's like a totally different arena, man. Like, it's a totally different world here. So guys, I want to wrap this up. Hopefully you guys enjoyed the podcast. Listen, if you liked Mike, if you liked what he had to say, if you really wanted to learn, let's say, how to tighten up your trading a little bit more with your risk management, find great opportunities, and utilize options, then do me a favor, visit us at prospertrading.com, request some time in Mike's room as well, or get pitched on Mike. We are talking about the 1 hour trading day training program. That link will also be down in the description below. That'll give you direct access to Mike as well. For the great Howard Greenberg and the great Mike Shore, it is Charles Moon. And we want to say thank you for your time. Don't forget to like, comment, subscribe, break it down, folks. Mike will be back on soon. We'll have others. Mike, It's been a blessing. I'm grateful to have you.
And this is fun. I'll do it every week.
Let's go.
There you go. Sounds like a plan. See you guys next week.
Peace and love,
all. See you next week. Thanks a lot.
This has been Dips to Rips with Howard Greenberg and Charlie Moon, brought to you by Prosper Trading Academy. Visit us at prospertrading.com to find out more. This podcast should not be considered professional, financial, and/or investment advice. By accessing this podcast, you acknowledge that Prosper Trading Academy, LLC, PTA, makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information and opinions presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. PTA does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the PTA. PTA assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials of the third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein. Moreover, PTA makes no warranty that this podcast or server that it makes it available is free of viruses, worms, or other elements of codes that manifest contaminating or destructive properties. PTA expressly disclaims any and all liability or responsibility for any direct, indirect, incidental, special, consequential, or other damages arising out of any individual's use of, reference to, reliance on, or inability to use this podcast or the information presented in this podcast.